Good evening, everyone. Time for another silver update. We're starting to see some crazy action going on in silver. We're at 3408. This is a tick chart. As we pull out, look at the 1 minute. Had a huge spike here up to 34.25, 26, 27. Big drop down. So nearly a 50-cent move in after hours, and we're right back up testing it again. As we move out farther out, we can look back and see the last trading day that we had that was COMEX open was back here on the 18th. All this action here, most of it is after hours. We did get this move here up to 32. That was during a trading day. So we're talking about a drop off down to about 32.25, say 32.30 at the last time that the COMEX was open. And we're now at 34 something. So I'm not sure if the limit moves are $1.50 or if they're $3. If the limit move is $1.50, then we will lock limit, barring some huge drop overnight. If the COMEX opens where we are, near where we are now, then if the daily limit move is $1.50, we will lock limit up on the COMEX, which is a big that's a big deal. So moving further out, let's move out to the daily, because that's the chart we've been looking at. You can see the MACD is now going parabolic. It's almost matched its high before it corrected. So the MACD rule I said was projecting roughly, I think I projected 38. It's now looking more like 35 or 36 before it will be an all-time overbought for this move. So it looks like the MACD is projecting roughly 35, 36. I was projecting on a swing rule basis from 26.20 to 32.20. That's roughly $6. So we're looking at $38 or so on a swing rule. So a couple of targets, 35 to 36 or 36 to 38. What we're looking for primarily is the strength of this move before we get a correction. Anytime you're on a breakout, you want to see how far you move before you correct back. So we're looking at roughly 31.20 to where we are now, 34. We hit 34.20. We've done $3. And I said before that $1 to $2 would be a strong move, $3 to $4 or more would be an exceptional move. So we're moving up towards the $3 to $4 strength on the breakout. That would project a very strong price move, potentially between the 35 and 40 area. We should expect that we would correct back to this support area. It's long time support. When we pull back, it's not that long time support as far as this chart goes, but it's a new high from a long run, and unless we're going parabolic in some unforeseen fashion, then we should correct back to the 31 area. Now we have broken out of this important trend line, which marks the tops, and they've been consistent. Top, 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 and top, and then boom. So that could indicate that all bets are off, and we are now in a new parabolic arc, and that arc could take us anywhere from $50 to $100 fairly rapidly. That's always a possibility when we start to enter an all bets are off type of scenario. Now, that we may be entering a short squeeze scenario is possible. Short squeeze is certainly something that we would expect to see in the situation where silver has been manipulated to this extent. If we indeed have 3 billion or so ounces short, then we know that that can't ever be covered. So if we reach the point where most market participants begin to doubt the ability of the other side of the trade to deliver the silver, then we could reach that point where we have all kinds of crazy things. And one of the articles I wanted to talk about is an article by Trader Dan. It was posted the other day. I think it was linked by Turd Ferguson's blog. And Trader Dan goes through his explanation of what is a commercial signal failure. Now, commercial signal failure is a situation, and he goes and explains it. You want to read the article, I'll link it. Commercials are the producers of the particular commodity. And those commercials use the futures market. The whole purpose for creating futures markets in the first place was originally in agriculturals, where they had crops that were at different times of the year, so they could use the futures markets to hedge their prices on their crops that were due to come out a future month, and they could sell forward those crops and lock in a price. And so the commercials in the case of silver, of course, is going to be the miners. So the question is how much of their mining output have the commercials hedged, and what is the credit line on that hedge? So the issue is, if the price runs too far on them when they are essentially short, because when they hedge their position, the hedge is the silver's in the ground, they're short the paper markets. So the silver in the ground goes up in value as the price rises, and their paper position decreases in value, so they're effectively hedged. They're at zero. But the problem is the margin requirements on their futures continue to rise. So unless they have a sufficient line of credit, they can be trapped in what is known as a commercial signal failure. And he gives some examples here. This chart here is a very good chart of it. Is a chart of Minneapolis wheat that went through a commercial signal failure. And he puts here, try counting the number of limit up moves. You can see that it went limit up about 20 or so times. Now, you can see in this point you've got an expansion of the limit moves starting right there. Normally they double the amount that it can move in a day before it locks limit up. You can see we went limit up, limit up, limit up, limit up. These days right here it actually traded and then closed limit up. So you had a series of limit up days with 2 days where people were actually allowed to trade, and then boom, it locked limit up. Then once we got to this one, they said, okay, we got to expand the limit. We're locking every day. And when they expanded the limit, they locked anyway. Once, twice, 3 times. Actually, here's another limit up expansion. So they expanded it again after the second lock on the new expansion, and it locked limit up again. It locked again, and then it fell off and went limit down, then limit up, and then they expanded the limit to a great amount where you see here. Finally, it topped out at 2450 and then crashed. So you can see you can have a tremendous amount of limit moves, and that's what you get when you get a commercial signal failure, because they have to scramble over these commercials. If they can't get the line of credit to hold them through until when they produce, then they have to get out, and they have to get out at any price. And what happens is they fall all over themselves to get out, and the price doesn't even trade. It just locks limit up day after day after day after day, until finally there's a price where it will trade, where some people who hold it are actually willing to let go of it. So that's a commercial signal failure. It's quite possible that we could see a commercial signal failure in silver. I think it would probably occur Some have speculated that around the $60 mark would be curtains for JP Morgan. I don't know. That's another price target. That's a different thing. Now, you have to remember that JP Morgan is not a commercial. It's selling silver, but the question should always be asked, why? Because they don't make any. They don't mine any. Why are they in the business? Well, we know the reason. They're suppressing the price. But, okay, here we go. We're starting up again. So, at some point, depending on the number of contracts the commercials have sold short to hedge, they will be faced with the point of margin calls and the commercial signal failure. And we don't know what that price is, but we can just speculate. As I pointed out, the last update, the rise, now reportedly the rise was on hedged bets, which were long 1 month, short another. Supposedly that was the rise that the comics put on. I don't know if that's the case or not, but if it wasn't a straight margin requirement rise, then I'm sure there will be more in the future. And the point remains that if they continue to raise margins to try to squeeze out the speculative longs, but the longs intend to stand for delivery of the physical, then in reality they're actually hurting the shorts, because a lot of the shorts are commercials, and that means they have to put up that much more money that they have to borrow from a bank. And of course the naked paper shorts also have to put up more money to carry those shorts. So you can see a situation where actually raising the margin requirements could backfire on them, and the margin requirements are no longer a tool in the arsenal of the CME and JP Morgan, but they're a negative. So looks like we're shaping up to some kind of weird pennant forming here again. It's very unusual to see this kind of activity in the after hours. It's extremely unusual to see this kind of volume in the after hours. So there's a lot of stuff going on now. You know, we've got a lot of stuff going on in the Middle East. Finally today, crude oil, it's exploded to the upside. You can see it's been fighting this resistance level of about $92 for the longest time, and we just had an explosion here in price. And some have said, well, this is related to the Middle East, and they say that's why silver is going. Silver, to me, seems to be an independent. If we look at gold, gold still hasn't made new highs, so it's a safe haven, and it hasn't made new highs. The US dollar, no flight to safety buying. So I would say the silver story is a silver story of itself, not really related to what's going on, but maybe some panic is powering it higher. Can't say for sure. The last thing I wanted to look at is the silver bars on APMEX. Now you can see most of the bars are out of stock, and we've got 44 of the 10 ounces Inglehards. There's 2 of the 50 ounces, and there's 557 left of the 100 ounce Johnson Matthey. They're out of the 100 ounce Inglehards or Johnson Matthey. We just have 557 of the Johnson Matthey 100 ounce. Now that may seem like a lot, but keep in mind the shills were pointing out just a week ago how there were over 10,000. I came and checked it myself, and there was about 10,000 or so bars here, and they're down to 557. So it's been dropping, but that's a phenomenal amount of silver to be taken off. Correct me if I'm wrong. I think that was the figure that we had, but I know this doesn't display that, so I might be remembering incorrectly. Anyway, at the pace that we're going, it doesn't look like it will take long to drain all of this supply. In the least, it's it's very bullish to see that the demand is still tremendous even at these prices. So it does appear to be a physically driven squeeze of some sort. We'll have to wait and see tomorrow. Perhaps the COMEX will go limit up, or they may have a limit expansion. I think it's in their interest to not let it go limit up. That's a very dire sign when a market locks limit up and no one can trade. I don't believe there should be limit moves on any markets. I think they're very anti-free market, and you should always be allowed to get out if you want to get out. The price should be allowed to move as rapidly as it needs to move, and I would much rather keep the markets open so that people can get out no matter what than being locked in. There's no worse position as a futures trader to be locked in a limit move against you day after day after day, where the market locks limit and you can't get out. So I'm very much opposed to limit moves at all, but we may be facing a limit move tomorrow on silver, and if we do, we could actually see a series of limit moves and possibly a commercial signal failure. So we'll have to wait and see what happens tomorrow when the COMEX opens, and I'll talk to you next time.